Hello, traders. It's Sunday, January 25th, 2026, and this is Trader Geek Sam with your market review and preview for the coming week. Hope you're having a great weekend. And let's take a look at the week, month that it was. And we're starting out with Friday. Uh, Only thing really solidly in the green was the VIX, but not even up by 3%. And gold hit a new all-time high, up 1.33%. Mag 7 had a good day, 1.06%, as the Qs kind of took the lead this week, where the financials essentially took a back seat. So Qs up a third of a percent, and even TLT rebounding quarter of a percent. But IWM basically taking it on the chin, down almost 2% at the end of the day. And so are the micro caps. Mid caps lost 1%, and the dollar lost a bit of ground on Friday, almost 1%. Dow was down about 0.5%. On the week, we had gold up 8.72%, not quite hitting that $5,000 mark that everybody has their eye on, but I think it'll do it tonight or Monday in the futures market. VIX up a little bit on the week, even after a poor start to the week with a gap down. Mag 7 gained 1.11%, finally bouncing from oversold conditions, and the microcaps up 0.72% despite the weakness on Friday. Q's up a quarter percent. Bitcoin not recovering much, in fact, losing the most of the major markets last week, down 6.38%. Can't get out of its own way. Dollar losing 2% on the week. And in the currency world, that's a significant number. Mid caps down 0.5%, Dow down 0.5% on the week. Year to date, a month to date, quarter to date, all the same. Gold again leading the way after leading the way in 2025, up 15.5% month to date. So, boy, oh boy, what a run that is. And can't imagine what the pullback's going to be like. But what do they say? Things that go up parabolically don't drop like a feather. Anyway, microcaps up 9.25%. VIX is in the top three for the month, so it's up 7.5% despite the up and down movement. Small caps up 7.5%, mid caps up 5.5%. At the bottom of the list, Mag Sevens, not a great start to the year after not a great showing last year, but I think all the Mag Sevens were in the green last year. Dollar down a little bit less than 0.5%, and aggregate bonds up a quarter of a percent. So if you look at the Vanguard Total Market Index, up 1.5%. Definitely, if I had some overseas funds, we would see a little bit better performance so far. So taking a look at the sectors on Friday, a mixed bag. What do you got? Seven up, seven, eight down, eight up, seven down. And these aren't all exactly S&P sectors per se. I've taken a few liberties with some of them. We can see that materials still showing strength, up 91 basis points, and the XLP up 0.75 of a point this week. So they're starting to show some strength in 2026. Communications rebounding on the back of Meta having a nice bounce during the week, and metals and mining, of course, going with gold and silver. Silver hitting over $100 an ounce and not being content at all. Went all the way up into the 103s. That's another one that's not going to drop like a feather. XLE energy stocks are starting to get a little bit of traction, and it looks like oil might have found a short-term bottom. XLY, consumer discretionary, 0.42%. Real estate looked like it had a nice bounce on Thursday, but kind of gave it all back on Friday. And technology up a mere 14 basis points. XLF financials took it on the chin on Friday, down the most. So were transports and retailer stocks. So mixed bag on Friday, sector wise. And then if we look at the last week, metals and mining going along with gold and silver up 5.88%. Energy stocks up 3, and materials up 2.5, 2.65%, with financials and real estate losing the most on the week. And so did the utilities. Still can't find a solid footing in the utilities. And these are two defensive sectors, one risk on, so there's no real theme to this. In any case, mixed bag on the week, almost half and half divided in terms of sectors. Month to date, quarter to date, year to date, metals and mining far and away the leader, up almost 27%. Materials up 10. XLE, nice start to the year, up 10%. And staples recovering after the only sector in 2025 to be down on the year. XLI, industrial, still showing their strength, up 6% despite a little bit of weakness last week. And retailer stocks up 4%. Financials not showing any strength, down 3%. And communications with a little bit of weakness in Google last week. And Disney was down 0.65% year to date. And then XLU utilities still need to find their footing. Looking at the industries last week, Friday, we saw the cannabis stocks up 5%. The TAN, or the solar stocks, up 2.25%. And those are starting to look good. It could be a breakout on the solar stocks. Keep an eye on those. XVI losing 2.68%. And ITB, the home builders, losing 1.75%. If we take a look at the week on the industry basis, GDX miners, gold miners, up 10%, TAN up 6.46%, XOP 3.78%, XBI 3.11%. My biggest issue with the TAN is it goes in spurts, and so far remains guilty until proven otherwise. But so far, it's not looking too bad. Blockchain stocks losing 4%, and ITA, the defense stocks, not the defensive ones, giving back a little bit after a very, very strong run in 2025 and to start the year. ITB home builders, and then cyber stocks losing about 1.5%. So another mixed bags as far as industries goes. Monthly, quarterly, year to date, GDX by far the leader. Anything metals and mining is leading the way. And then you can see here, TAN, the solar stocks up 12.44%. So there might be something there. SMH still showing strong strength, making a new all-time high this month. And blockchain stocks up 11%, as are the defense stocks. And ITB still up 9% despite the weakness over the past week. And XOP, exploration and production, this is the energy trade, rebounding so far in January. But and robo stocks, robotics, and other related type stocks, AI stocks. Software, just miserable. And I think I forgot to point out the XSW. No, I guess it wasn't a positive week. It was still down 0.4%. We had a little bit of bounce on Friday, but clearly the software stocks are oversold and could use another bounce, or could bounce a bit. Don't know how far it'll go, but it's worthy of keeping an eye on for a bounce. FDN, internet stocks up down 2.5%. Cyber stocks up down about almost 1%. So most industries here, the major industries, are up on the year, with a little bit of weakness in software and internet stocks. Looking at the Max 7 for last week, here we go. Apple losing almost 3%, the weakest of them after getting a little bounce. It just can't seem to sustain it. Google losing about 0.5%, but Meta really rebounding 6%, and it's about time. Six and Tesla up 2.64%. So last week, two of the Mag 7s were in the red, but uh, on a month to date, year to date, quarter to date, um, Apple is the clear loser, 8.76%. Microsoft right behind it at 3.65%. But Google continuing its winning ways from 2025, and Amazon up 3.61%. And among the Mag 7, my pick for the year is Amazon to take the lead, kind of similar to what Google did, but take that for what it's worth, which is not a whole lot in terms of predicting what's going to happen. All right, so let's go from there and take a look at the charts and give my thoughts on what's happened or what looks to happen. Starting out with the SPX, for those new to my videos, I am a top-down trader and I look at the daily, the weekly, and the monthly charts to see what how things might propagate from the daily to the weekly to the monthly. And so we had a 4-day trading week thanks to the holiday on Monday. We came in, you can see here, to a gap down on Tuesday, and we recovered the very next day and even took out the prior day's high. So very volatile week. So you see a bar like this, you did not expect to follow through like we had on Wednesday. And Thursday, we had another gap up, but we ended up closing in a doji, and the same for Friday, another doji. And you can see here that what I have drawn here is the January 14th close, and the January 14th close is right here, not 17th. Let me see if I can find it here. 185, 6. Here we go. So I've identified that as kind of a go, no go level. If we close above the 69.27 level, then we probably will make all-time highs. You can see on Thursday and Friday, we kind of navigated above it and then closed below it. Same with Friday. We got above it and closed below it. So this tells me that there's some importance to this day, the 14th, where we had a long tail and then we closed right at that level. So I see that close as a significant area to overcome if we're going to continue and head up to all-time highs. You can see MACD is solidly negative and heading down to the zero line with relative strength, kind of neutral right at the 52 level. So what we have here is a bunch of chop, and that's been going on for months now. We haven't made much progress. We make marginal new highs, and then we just come right back in. But I mean, the trading range is essentially from call it 6,800 to 6,900 or 6,950. And until we get out of that range, we're just going to be chopping around. And but boy, when we break that range and head in that direction, kind of measured move is at least 100 points, depending on where you draw your little box there. Bearish chandelier, bearish PSAR, those are volatility stops. So we're both below them on the daily. And so the daily chart advantage goes to the bears, at least at this point, until we show a close above the 69.27 level. And you can see I already marked the options implied expected move here at let me see if I can fix this, and 7034. So it's about 118 points on the week. So we have a full trading week. We have an FOMC meeting, and there you go. So we'll see if we use up all that move. I think we will. And if we switch Over to the weekly chart, you can see that we did stop one-time framing to the upside this past week, and that just means that the lows of this week were lower than last week's low. MACD still sideways to down, and it's curving a little bit further down with the relative strength at the 62 level, kind of in no man's land. But chart is still bullish on a weekly basis. The advantage goes to the bulls, bullish chandelier, bullish PSAR, and unless we get under 6,600, we're not going to break that PSAR, and our little chandelier is way down here, so on a weekly basis. So we're still in good shape on the weekly. If we take a look at the monthly, nothing wrong with this chart. We're just, we had a doji for December, and we're so far forming a doji in January. And as they say, as January goes, so does the rest of the year. So with 5 trading days left in the month, and a lot of wild events and earnings starting in earnest this week, it's anyone's guess where we're going to end up. But they'll probably try to close January positive, but who are they? I have no idea. But in any case, bullish chandelier, bullish PSAR, solid MACD, the RSI red hot overbought, just the way we like it, to keep the bulls in charge. So bull, bear on the time frames there, and so the advantage goes to the bull solidly. But so we can call it bully with a side of chop, because that's what we've got in this market. And I think that chop and volatility is going to continue at least until, what do they say? The meetings continue until morale improves. All right, I'll stop with the silly analogies and cliches. NDX looked a little better last week than the SPY, and you can see here we got down on Tuesday, just like the SPX. Nice recovery, and here I don't have a line of demarcation. I think it's about it's above there. I think it was like 25.5. So where was the 14th? If I can get my mouse there. Same type of thing, yeah. So if you call it 25,547, we closed above there. So it looks better. Here's the PSAR dot. So if we can take that out on a closing basis, that would be good at the 25.7 level. Again, with the FOMC meeting and several names on the earnings front, big names, major names like Tesla and Apple reporting this week. And I believe Microsoft as well. We should see some wiggles and jiggles in the NDX. The chandelier stop is right up here at 25.9. So MACD is negative, but look at that. It's trying to curve back up again, and RSI is pretty neutral. On a weekly chart, looks better than the SPY. SPY or the SPX had a doji, whereas we have a nice solid candle here, and you can see here where the expected moves are for the NDX for the coming week. We haven't made a new all-time high since October, so if the NASDAQ is going to carry the baton of strength going forward based on what we saw last week, so be it, and that would be good to keep the market rotation happening. MACD is definitely in the negative camp and slanting down, so to speak, and then the RSI at the 60 level, kind of in no man's land. Looking at, we also have bullish PSAR, bullish chandelier, and same with the monthly. Looking real good, just like the SPX. We had a doji in December. We're still forming a doji with 5 trading days to go in the year, and MACD is solidly positive, and so is the RSI red hot. And This one goes bull, bull, and you could say, until we take out these, get these volatility stops back in. This one, I think it's a draw, but the winner is chop again. So be careful what you're doing out there because this is an easy environment to get your account chopped up, especially in the kind of volatility that we had here. Big drop on Tuesday, and then only a recovery on Wednesday, and then continuation on Thursday and Friday. So lots of wild swings. So be careful out there. And next one is the RUT or the Russell 2000. Um, Really disappointing to see this kind of candle on Friday. And your clue was this big topping tail. We made a new all-time high on Thursday, and then we closed at the lows on Thursday, and that mostly portends some pullback action, but this one opened on the highs and closed at the lows, and not a candle you like to see, and taking back almost just 2 days worth. MACD is still solidly positive. We quickly came out of the overbought level, and we like to see an RSI that stays overbought for days, weeks, and months to call it a real bull market. We have about a 46-point expected move for this coming week, but definitely not a pretty candle. Doesn't mean it can't recover right on Monday. We're right at the 8 EMA, so we could get a bounce there, and we haven't flipped any volatility stops just yet, although we're sitting right on it there. A close below, let's call it 26.65, which is only a few points, could trigger that PSAR stop. The chandelier stop is down here at 26.28. On the weekly, you can see that obviously a topping tail there, and doesn't look as bad as the daily, obviously. MACD is still positive, and we didn't quite get overbought on the weekly time frame, and we're kind of pulling in, and that's okay. We can take a rest here. One day does not change the trend, of course. This is solidly up, but another bad day like this, and things could change very quickly, especially since the Russell 2000 is 2,000 stocks versus the S&P 500 or the mid caps. And basically, this has a lot more sway on breadth when the Russell is positive. You've got 2,000 stocks, an index of 2,000 stocks working in your favor. And that's a good thing for sentiment out there. Looking at the monthly, MACD solidly positive. Trying to get up there to the overbought level, but nice candle still on the monthly, pulling back a little bit. So this is still advantage bulls on the Russell 2000. So nothing wrong with this picture, and we just need to see some bounce back from Friday's schmeising, and what we don't want to see is another day like this come Monday, Tuesday. And again, this is an FOMC week. Monday of FOMC week historically has been a little bit weak, and then we get a bounce back on usually on Tuesday. So Friday started a little bit of weakness in the overall market and could continue into Monday, but quite honestly, the markets have not necessarily followed tradition in the last several months, to be sure. Taking a look at the VIX, you can see here we popped up on Tuesday after we returned from a 3-day weekend, and we didn't even get to 21 on here. So we even had a doji on Monday. So that was telling us something about Friday. You can see here, we had a little doji, and then we got up to 20.99 on Tuesday, not even 21. after Friday's close at 1884. So was that Friday? Well, Friday's close was here. We have, I guess that's Mondays considered, and then right there Tuesday, and we came right back down, and we're down at the 16 level. Had a little bounce up on Friday from uh, the 1564 level on Thursday. So towards the afternoon, we saw some weakness in the markets. Uh, Maybe some people just didn't want to go long. Um, Ahead of headlines potentially over the weekend. MACD is positive, but looking to flip negative, and we can see that RSI is middling right at the 15 neutral level. There's a weekly, doesn't say anything at all. MACD does look like it wants to flip positive, but we're going to have to see more work done. There's that PSAR dot right around, call it the 22 level. We need a weekly close above 22 to make a difference. One thing I like to do with respect to the VIX, veteran watchers of this video know that I like to compare the prices of the calls versus the puts that are equidistant out of the money. So we closed the VIX at 1609 last week. Let's call it 16. And if I go out $1 out of the money on the call side, we're going to pay, call it 228 for one of the calls. You'd buy these calls, obviously, if you're bearish. And then if we go $1 out of the money on the put side, you're going to pay about 15 cents. So we're looking at about, call it 7 to 8 times advantage of the calls over the puts. So this is a feather in the bears camp saying that even though if I go back to the chart here, uh, when the VIX closed inside the Bollinger Bands on Wednesday, that gave us a short-term buy signal, and it was confirmed with the lower VIX closed on Thursday. And so that buy signal, short-term buy signal, is still in effect, and we did get a little bounce back on Thursday and Friday, but we didn't take out the Thursday's high. So we're still have a short-term buy signal in effect, but these have failed of late, especially in a choppy market like this. So the pricing of the VIX option tells me that the bears have the advantage here. There is somebody out there buying the calls or SPX puts. Looking at the VVIX, the volatility of the volatility index, here I tell you that once it's over 100, it's worth paying attention to. And after closing below it on Thursday, we're back above it on Friday. I mean, there was some active hedging, some active VIX call buying happening on Friday. So over 101, I start to pay attention. Over 110, then I really start getting concerned that there probably is a lot more hedging going on, a little more downside. And since I'm talking about options, many of you may already know that what's happening this week is that we're going to get essentially zero DTE. Well, not really zero DTE. They're probably going to be one DTE. Starting this week, you'll see options for the likes of Apple, Google, and other very liquid stocks. So we're going to see Monday and Wednesday options offered on them, and in addition to the weekly options that we have currently. So I guess we have the 30 January, that's Friday, and then we have already the 2 and 4 February. So we're already starting to see these posted. So you're going to start seeing Monday, Wednesday, and Friday options, and it won't be long, I guess, before they start posting everyday options on some of these options. So this is increasingly an option-driven market. And since traders are going to the shortest duration possible, I think these options will prove very popular. My perspective is trade them on the long side, not on the short side. You have no edge by selling these zero DTE options. Trust me, the machines are better and faster at this than anyone could be. So if you want to mess with these options, then mess with the buy side, not the sell side on a very short-term basis. Otherwise, you'll risk getting run over. In any case, I digress there. And taking a look here, I looked at the VIX options. What we didn't look at is the SPX. And let's take a look. We have FOMC on Wednesday. And so we have an 83-point move into the close on Wednesday, but here's the $118 move into Friday. So this is much bigger than the 84-point move we had last year, although last week. And although last week was a 4-day trading week, this one is definitely a full week, and it deserves that move given that we have the FOMC meeting, we have a bunch of tech earnings, and a lot of cross currents as far as geopolitical news and what's happening with the economic reports. Speaking of which, and I should share that with you, and I didn't. Let me bring that up right now. Economic reports, and let's share that. So taking a look at what's on the calendar for this coming week. Monday, we have durable goods orders for November. Not sure what good that is, given that we're nearly into February. Consumer confidence on Tuesday. And then we have a little event called the FOMC interest rate decision at 2 o'clock with the Powell yapping conference at 2:30. So there should be some pretty good volatility there. So let me take a look here. And sorry about that. Thursday, jobless claim, trade deficit, wholesale inventories, factory orders. And then we have PPI for December on Friday morning. So lots of economic reports, core PPI year over year, and Chicago PMI, and a couple of Fed heads who are we have Musalem and Bowman speaking after the market closes. So busy economic week. And if we take a look and see what we have in terms of earnings, let me see if I can share that. Where's my earnings? Okay. There we go. We're starting to come into the heart of earnings season, although this is not the biggest earnings week. Not a whole lot on Monday before or after the open. Nucor, Baker Hughes. On Tuesdays, where we start things in earnest, United Health, Boeing, UPS, and GM, Raytheon, Synchrony Bank, American Airlines. So you can see lots of the prime members of the S&P 500, Northrop Grumman, Kimberly-Clark. After the close, F5 Networks, Texas Instruments, Seagate, which has been on the tear with the rest of the storage stocks. Before the open on Wednesday, ASML, a big chip making equipment company, AT&T, GEV, which is also up big in 2025, Starbucks. And then we have a little company called Microsoft and Meta and Tesla reporting after the close on Wednesday. So this is kind of the mega day in the market. So you get the FOMC meeting and decision, which is essentially no rate cut, that less than a 1% chance or 2% chance of a rate cut. So it's about with the commentary and the reading of every little letter in the announcement. ServiceNow not having a good year so far. IBM, Waste Management. On Thursday, we got MasterCard, Caterpillar. Well, you can read all of these, but basically, another company you may have heard of, Apple, after the close on Thursday, Visa getting, along with MasterCard, getting hit. So one is the morning, one is in the afternoon. That's interesting. Western Dig, another runaway stock here. And on Friday, you have American Express and the two biggies in the oil and gas, Chevron and Exxon, reporting. So some kind of old economy stocks hitting with earnings on Friday. So very busy week in terms of economic reports, very busy week in terms of earnings, 118 point move. We've seen days with 100 point moves, let alone a whole week with that. So in any case, be careful out there. It's very choppy. And this is not an environment unless you're doing a longer term or a swing trade for day trades. It's kind of a smash and grab environment. Don't be caught up and let them take your profits. You saw on Wednesday, the market was up pre-market, and on comments from Davos, it went down, and then more comments afterwards, and the market was straight up. So it's easily to get chopped up and trapped in different moves. So be very careful. Keep your position size shorter. This is not 2023 or 2024 or 2025 trading environment. This is a far different trading environment, and the same tactics are not going to work. In any case, thank you for watching. If you have any feedback, at Trader Geek on Twitter, or Trader Geek Sam in the forum. I appreciate you watching and wish you a great Sunday, and I will see you again next week. Bye-bye.